Hello and welcome to Mint Funds Update. My name is Marek Czeszkowski and I'm joined by Ryan Falls. We'll be talking about what happened within Diversified last month and our market outlook. Just looking at our scenarios and the framework, we believe that soft landing is still the most likely outcome. However, there are some risks to that, and in particular, the big question on all investors' minds is inflation and whether we see inflation continuing the downtrend we saw over the last 9 months. Now, we still expect soft landing, and here on the left-hand side, you see the chart of global expectations in terms of GDP growth. As you can see, the real GDP growth is expected to be positive in 24. However, it is a very small positive number. And in the meantime, inflation has trended down despite a strong labor market. Here on the right-hand side, what we are showing is the US core CPI inflation, excluding shelter and used cars. So this measure, annualized, is now well below a 2% that Fed is looking at. Obviously, it's just 3 months and annualized. However, the big part of the story for the US inflation is shelter. Now, shelter accounts for 35% of the US CPI calculation, and it is trending down. Now, here on this chart, what we are showing is the Zillow Observed Rent Index. So that measure normally is a leading indicator to what actually happens within the shelter component of inflation. As you can see, it has been trending sharply down, and therefore we believe that that will support the view that CPI inflation will ease off further. Now, one of the things that have been raised in the past was the risk of the second wave of inflation on the back of the strong wage growth. We think this is less likely to materialize now. And on these charts in the US, we can see that the number of jobs hard to get has been reducing. Unemployment rate has started to go up, and the number of job openings is also reducing. This is down from a really high levels. However, the trend is clearly moving in the right direction. In New Zealand, the outlook is a bit more challenged. We are in a technical recession. More recently, the mood has improved, as you can see in this chart. Business confidence and activity have recovered from the downs that we saw in the beginning of the year. And things are now tracking to a slightly positive quarter for New Zealand economy. In terms of inflation, that is another thing to consider. Similar to global markets, we are seeing a good progress on inflation. So inflation expectations have been trending lower. Also, pricing intentions by businesses have come off quite sharply from the highs that we saw last year. And in terms of the wage growth, similar to global markets, in New Zealand, we see that the wage growth expectations have trended down and are actually trending down very sharply. So overall, we believe that that will support the view that inflation will come down in New Zealand, but perhaps with a bit of a lag compared to what we see globally. I'll just pass on to Ryan now.
Thanks, Marek. I'm Ryan, and I'll take you through both the income and the growth funds performance for August. So looking quickly at the table on the left-hand side, we can see a breakdown per asset classes. We have mixed performance across a number of asset classes, with a few coming in negative and one, particularly Australasian equities, coming in slightly negative at -0.5. Our cash and derivatives and our fixed income both came in at +0.2% and +0.1% in terms of return contribution for the month. And global equities was flat. In terms of the individual positive contributors, so our cash and derivatives position was the largest contributor this month to the overall fund return, and this is due to our derivative positioning ahead of the Jackson Hole conference. Looking now at our Australasian equities asset class, the Goodman Group and Tourism Holdings were our two strongest performers within that asset class. Goodman Group up 13.7% for August, and Tourism Holdings up plus 9.3%, with Tourism Holdings doing well on the back of strong annual results, which helped dispel any concerns on weakening New Zealand tourism market. Within our global portfolio, Novo Nordisk plus 16.7% for the month of August. It benefited from news on positive results on their semaglutide heart medication trial. Looking now to the negative contributors, staying with global equities, we have Charles Schwab, which is down 6.4% for the month. And this was as a market reaction to news of net asset flows to the company being negative in July. Turning now to Australasian equities, Precinct Properties struggled this month at negative 8.6%. And this was on pre-election news of changes to commercial property structure devaluation policy by the National Party, which is aligned to the incumbent Labour Party's policy. Turning now to the growth fund. Again, looking at the left-hand side, we can see the performance breakdown for the asset class. However, mostly negative performance for the growth fund in August. Fixed income came in flat, with global equities our largest attractor, and Australasian equities also contributing negative 0.4% to the overall return. In terms of positive contributions, again, within Australasian equities, Goodman Group and Tourism Holdings held up well. And Goodman Group specifically, it surged on a market update showing strong EPS growth and an increased focus on data center investment going forward. Again, globally, we had Novo Nordisk in the growth fund, plus 16.7%, but also we had Boston Scientific, which is plus 4% for the month. And this was buoyed by positive results from their FARA-Pulse FDA study, which led to speculation on FDA approval for their heart condition treatment. Turning now to the negative contributors and staying with global equities, Estée Lauder had several analyst downgrades for the month, and because of this, their latest trading update showed weaker forward guidance. Closer to home in Australasian, we had KMD Brands, which was down 8.8%, and this actually continued to deteriorate on the back of a weak trading update from Australia and some traders, market participants positioning themselves ahead of a new or planned index rebalance in the month of September.
Thank you, Ryan. Thank you for listening. If you have any questions, please contact us on info@mintasset.co.nz.